Hey guys, if you are a home buyer and you're in the market for buying a home, I want to show you a strategy that I often utilize with my buyers to help them save money when they're buying a house. And this may work for you, may not work for you. Like I tell every buyer, you have to run the numbers and see which options work if this is something that you can use. But hopefully this strategy and tip can work for you. And the reason I want to do this because if you're waiting for the government to make homes more affordable and to bring affordability more into reach, you may be waiting a while. So employ this strategy, whether I'm your agent, which I hope I am your agent, but if not, even if you have another agent, ask your other agent to employ this strategy and see if it works for you. All right, check this out. So most people, when they go buy a house, let's just say if they go buy a $300,000 house and the seller agrees to give you, let's say, $10,000 off of the sales price. That's the most of you going to be happy about that and take that. But here's another option that you can look at. Now check the chart out that I'm about to put up. So one of the things you can do, instead of taking that $10,000 off the sales price of the house at a higher interest rate, why not ask that seller to give you that $10,000 as a seller credit? And then you use that seller credit to ask your lender to buy down your interest rate, because that interest rate is a whole lot more important for the payback. It's about the most important thing when it comes to paying back that mortgage of how much you're going to pay back is that interest rate. So take a look at this chart that I got right here. I don't know if I got it on my side, left, up, down. It's going to be somewhere here. Check out this rate, monthly comparison. So on the left-hand side, $300,000 home, if you get $10,000 off the sales price and you're going to be financing $290,000, just supposing you put down 3.5% down payment, then you're going to be financing $279,000. And with that monthly payment of 6% interest rate and 3.5% down, you're going to have a monthly payment of about $1,600. Now, the payments that I'm showing you is based off just the principal and the interest. I did not include the escrow that will be in there, which would be your property taxes, homeowners insurance, and your PMI that would be on that loan. And the reason I didn't do that because that would be different based on what area you're in. Because obviously, if you're in New York, your property taxes is going to be way higher than South Carolina. So that's why I didn't do that. So at $279,000 finance, you would be looking at a monthly principal and interest payment of $1,600. Now, if you buy that rate down, take that money and buy that rate down, and you finance at 5%, that $300,000, and you put down 3.5%, then you're financing about $290,000. And your monthly payment would be $1,500. And I know what you're saying, Dave, that's not a lot of money. That's only $113 a month that I'm saving. You're right. But you got to add it up. You're going to hold that mortgage. Most people get mortgages at 20-year or 30-year. So look, $113 a month comes out to be $1,356 a year. At $1,300 a year, it comes out to be $40,000 over 30 years. So you could save $40,000 over the life of that note. And just think about it. The bigger the numbers, the greater the service. The greater the savings. So the larger the number, the greater the savings. So again, this strategy may not work for everyone. Some people may not care about saving money, but if you're in the process of buying a house and you want a strategy that can help you save money, ask your real estate agent and your lender, because your lender really is the one you got to talk to about buying down the rate. But one of the reasons every good real estate agent knows this is because for me, I have about 5 primary loan officers, lenders that I work with, and I know which lender has these different products and they'll let you buy down and how much the buy down costs. I know which lenders from working with them add on additional overlays, which ones don't. I know which lenders will absolutely cut their origination fee for all VA lenders. If you're military or something like that, they'll cut their origination fees. So that's why it's good to contact your real estate agent first and ask them which lenders they recommend, which lenders they have history with. But if you happen to reach out to a loan officer first, that's fine too. You can still ask them about buying down the rate. Again, this is just a strategy that you can try and use. Hopefully it'll work for you and hopefully it'll help you. All right, God bless, guys. See you on the flip side.